Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 1st of August. All right. Now, as we go through the open sort of trading day, you can see once again, you come back to the markets, you can see how the conditions are. Now, we do have the FOMC meeting today, the 1st of August in New York. So with that release, this is the biggest global financial market event. And from that emanates direction if the Fed gives us clear signals, and I think they will. But what you can see in the major currency pairs, we've had a few things sort of banging away. Dollar China. Now, the key thing from yesterday was the Bank of Japan just slightly tweaking their monetary policy. Now, they were saying that rates are going to be on hold for an extended period of time, and that has seen there's a fair bit of volatility between 111 sort of 40 and 110.80, where it was up and down all over the place. Now, that text, the market has sort of seen that as saying rates are on hold. Now, I've been around a long time. Rates in Japan have been negative or zero or 0.1 for 30 years, right? If that's not an extended period of time already, I don't know what is. So the market's got themselves a little bit carried away here with, the interpretation of what the Bank of Japan is saying. They're just joining the global mantra of the rest of the central banks. As I said, interest rates have been zero for 30 years. So how can they say now we're going to keep rates on hold for an extended period? You've already been doing it. They will be zero forever in Japan, right? Until they change the structure of their culture, which is employment and all the other aspects from that. So, but coming into that, now I've got off my stand there. Now, the fact is we are expecting the US FOMC to come out, stick to the plan. There's an 80% chance of a hike in September, if not potentially two. So that means the US dollar rallies. Now, with Japan highlighting that rates are on hold for forever, that does put a bit of a downward bias on the yen. So you would expect dollar yen to rally today. Now, around this, the yen crosses were all over the place. Okay, that's why you see here the volatility around that release and the speech by Kuroda, the Bank of Japan governor, how the majors were a bit all over the shop. Okay, so and if you have a look just across these majors, look at in particular. Let me just clear that for a second. You come and have a look at in particular, like look at the price action here of euro up, down, and basically back to where it was. And this is what happens when you get sideways moving markets and the range contracts. What you generally get, and this is like 98% of the time, if the range is contracting and you've got support and resistance, okay, both sides, what you get is you get a pop to the top side, pop to the downside, and it's back to where it was. What it does is it flushes out the short-term traders looking for that next big move. But the next big move will come directly from central bank announcements. And we've got two big ones coming up, the FOMC today and then the Bank of England the following day. So just sit tight for the moment. I think it's a little bit brash to be running in sort of suggesting where these currencies are going. All we can do at this stage is really just come back and fine-tune your levels. Now, we've got a new level on the top side in euro. It's pretty weak short-term support there. As I said, I've just moved it to the current level, and that doesn't really tell us too much. Sterling's had it's back right in the middle of the range, so it makes sense to be adjusting the trend lines there. Dollar CAD also. We did have slightly firmer Canadian GDP numbers, which now obviously, the Bank of Japan saw it shoot one way, the data sends it the other. Now we're back trading mid-range as well. So this is how your major charts should look as we go into the Asian session and as we prepare for the FOMC. Now we've got levels here, top and bottom of most of these pairs. Now we just had some employment numbers out of New Zealand. They were a fraction weaker. It's enough to sort of see the Kiwi sort of dribble off. Now, dollar yen, it's a very tough trade here at the moment, getting long up around 111.75. Now, I'm almost 100% certain that Powell, he seems so solid. He's sticking to the plan. The numbers have been pretty much falling into place. He'll be sticking to his mantra. Two more hikes, and we'll see what happens. Dollar yen should go up. But here, see it's where it is at the moment. It's in the middle of absolutely nowhere, right? So it's very hard to stay long at this stage. If anything, you're probably looking to get long dollars on a dip back towards sort of 111, sort of 2030, if anything. Euro, well, it should be lower, okay? The euro, the ECB are sitting pat. The Fed are going to be moving again. So I can see room for the euro to be dipping, but if you look over the course of the last few weeks, it's just been dancing around sort of 116.50 to 117. It isn't really going anywhere. And that's the same for sterling. Now, this brings us back into, if I just come back over here, just have a look at the raw nerve here with, when we just break down the dollar index itself, okay, it's still trading sideways as well. What we're looking for to make these major currencies easier to trade is clear direction on the dollar here. Now, either screaming to the top side or screaming to the downside. Now, the Fed are definitely on the top side bias. We're waiting for that direction, and that'll give all the major currency pairs direction. At the moment, it's just trading sideways. Range-bound markets, which are causing false breaks here and there all over the place, it isn't really going anywhere. And look at the offshore yuan. Now, there's been a lot of, obviously, focus on this the last week in particular as these tariffs start to take effect. We saw it shoot to the top side. Now, we saw it sort of drop down just underneath that support trend line once again, trigger a few stops, and then it's back to where it was yesterday. So we're not getting anything clear out of the offshore yuan. We're not getting anything clear out of the dollar at the moment. So it's really a matter of being patient and waiting for the next opportunity to drop. Now, and this is where the MyFX Trading Hub, you've really got to focus on where the direction's coming from. Now, we've got 9 hours until the UK manufacturing data comes out. There's nothing really in Asia that's going to change things at this point. The BOJ is out of the way. We do have clear correlating markets, but we don't have the fundamental direction. Where does the fundamental direction come from? Well, it comes from these events. Now, the Fed is the major focus for Wednesday. Now, we do have UK manufacturing. I think that can come into play for a potentially short-term opportunity. If there's massive variance in the number, then you will see sterling move. The US ISM manufacturing PMI, now on its own, that's a decent release, but leading into the FOMC, I don't know if traders are going to really jump into that unless it's a huge variance from what is forecast. Okay, so that's where you got to piece together. You're looking, okay, what's the main game and where are the sort of short-term opportunities in between? At this stage, I can see, well, the whole market can see the Fed is the main game because that'll give all major currency pairs direction. These are the two things before it. Yeah, short-term trading opportunities potentially, but more so probably sterling than the ISM manufacturing. But keep an eye on the Fed fund rate statement. What I'm going to do is later today, I'm going to do a preview of the Fed announcement. And what we'll see is the good thing about this one is there's actually no speech afterwards. So we'll have all the facts straight away and we can start trading, almost straight away. Basically, once the initial volatility goes out of the market, after sort of 30 seconds to a minute, volatility's gone out of the market. We'll see what's happening. We'll be able to look at the statement and then work out exactly where the dollar's going. Is it a change from what they had previously, or is it a continuation? All right, so that's where we are with the major currencies. Now, if you come back to just the general news, making sure you keep abreast of what is going on out there. Knocked by BOJ decision, dollar firmer. I mean, this is as I said, this is the most bizarre thing I've ever heard of. The Bank of Japan keeping rates low for an extended period of time. Man, as I said, rates have been zero for 30 years. I mean, is that not an extended period of time? I don't know why the hell they've reacted to that, but I think it's more the fact that the Fed, there's more emphasis on the Fed who are going to be raising rates, and that's why the dollar's firmer across the board. Now, sterling, Bank of England on Thursday I can tell you sterling will move on the FOMC. Then once that's out of the way, then the Bank of England will come into play for sure. And, they are looking for a Bank of England hike. That's very important. Canadian dollar climbs, hasn't really gone anywhere. This is where the news services are really struggling to give you new, fresh information. Sure, the Canadian GDP numbers were a little bit stronger, 0.5 compared to 0.4 expected. And that's where that movement has come from. Oil to hold steady into 2019 as OPEC US compensate for supply hitches. Now, I don't know what's going on with oil, but they are definitely messing with things. So that's where we are. With the news, there's no clear talk about, a fundamental release which is dominating currency direction. And that makes it a little bit harder for us to really work out what's going on. The only thing that we can do, okay, is focus on the tangible aspects of the technicals at this point. The direction will come from the data and, most importantly, the FOMC. The dollar index, we have a couple of good levels here, and I'm still in the bullish camp as far as the US fundamentals, so I can see it going higher, and a break of 94.60 on the dollar index is a key opportunity. I'm sort of getting a little bit fed up with the offshore yuan. It has too much impact at the moment. I think in the coming months, once these US tariffs do start to impact Chinese manufacturing and exporting and their trade balance, that's when we'll see this yuan really come into play. It's just all over the shop at the moment. It's too hard to be trading the other pairs off the back of it. All right, so that's where we are, traders. It's this is sort of getting exciting. What you've got to do at this stage is just remain patient and vigilant to wait for the opportunity, right? As I said, like Aussie and Kiwi are expected to continue to range trade. Dollar yen should be a buy on dips leading into the FOMC. Okay, it does look like it's heading north. Euro sort of sideways for the moment. If anything, that short-term support line, the more I think of it, the more I look at it, the more I don't like it. Doesn't make a lot of sense. You got that support line down here at 116.40. It is just trading sideways. Sterling also trading sideways there as well. And dollar CAD, well, oil has dropped a couple of bucks. So you would expect that to rally, but the GDP numbers were pushing it down. So it's just going to trade sideways as well. And that's pretty much it, guys. So there's a fair bit to sort of mull over. There are a couple of, just to finish up, there are a couple of, early European manufacturing numbers. Now, that could have an influence. Euro does have a slight short-term downward bias at the moment, so keep an eye on that. But I can tell you the main piece of information there will be the UK manufacturing. That's one of the key components of the UK market. So keep an eye on that as we go through as well. All right, that's pretty much it from me, guys. There's plenty to do, plenty coming up. We'll have lots more to talk about. As I said, I will be doing a FOMC preview later in the day once we get through that Asian session, maybe as we head into that European session. All right, guys, have a good trade day. We'll see you in the trade zone. All the best. Cheerio.